let's talk to the man who coined the term bond vigilantes back in the 1980s. Ed Yardeni is a former chief investment strategist at a number of Wall Street firms. He also served as an economist with the Federal Reserve Bank of New York. Ed now runs his own investment strategy research firm. He is on the phone with us from London. Ed, let's address the vigilante question. In your mind, is this a situation where people are selling off bonds because of growing concern about the U.S. deficit and our ability to repay the debt, or is this more a question of perhaps flickers of life and growth and inflation?
Well, I think it's probably all of those factors, but there certainly does seem to be a coincidence between this recent significant backup in bond yields and concerns that Washington finds it all too easy to increase the deficit by extending tax cuts and adding other tax goodies, and seems to already be ignoring the results of the plan to reduce the deficit that was put together by the president's commission.
And do you think it's too early to call, though? It sounds like you don't. You say the bond vigilantes are back. I mean, what would you say if the 10-year is at fair value? Some people have that view.
Well, fair value in my mind is about 4.5%, and I just have a very simple model which looks at the year-over-year percent change in nominal GDP versus the 10-year, and nominal GDP is at 4.5% right now. I think another important development here is Ben Bernanke was on 60 Minutes Sunday night, in which he, with 100% confidence, said that he could bring inflation back to 2% and keep it there. Well, I think the message to the bond vigilantes was that we're not going to have deflation, that he'll do whatever it takes to avoid deflation. And the fact that he said he could get inflation exactly to 2%, that doesn't have a lot of credibility, because if he's so good at keeping inflation pegged at exactly at 2%, why are we below that? So I think there's a fear that he may overshoot, and that's another reason to lighten up on the bond market.
Ed, the Fed can continue printing money. Some say it should, in fact, although, as you know, others say it shouldn't. Who wins in a battle of the bond vigilantes versus quantitative easing?
Well, I think I'm here in London, and clearly in Europe, the bond vigilantes have had a tremendous influence. They sort of created their own, these governments have created their own monster here, because by issuing so much debt over the years, the bond vigilantes have never been more powerful. It's just they've been asleep at the switch here for a long time, and suddenly they're waking up in Europe and saying, well, we made some mistakes here in buying the debt of some of these peripheral countries at yields that were maybe too low, too close to German rates, and suddenly spreads widening up. And now you're kind of seeing the bond vigilantes waking up in the United States. So I think if I had to bet on who wins the contest between governments and the bond vigilantes, the bond vigilantes would always win, because they're in a position to threaten to shut the bond markets down and not finance anything unless governments start to move away from reckless monetary and fiscal policies.
And I want to tap into this international perspective that you just brought in. Okay, the U.S. is a mess, but maybe it's less messy than some of the other choices out there. And we know in the markets, it's just a term of relative. Everything's relative. I mean, the dollar is still the world's reserve currency.
Yeah, well, when it comes to some of these reserve currencies, it's almost an ugly contest. And investors and speculators seem to change their mind on a fairly regular basis, which currency is looking the nastiest and ugliest. Right now, the dollar looks pretty good relative to the euro, but I'm not sure that's much of an accomplishment, quite honestly.
Ed, President Obama is adding fiscal stimulus. Meanwhile, Europe is implementing austerity. It's the old fiscal stimulus versus austerity debate. Who does the bond market reward now?
Well, I think the UK is making tremendous progress here in reducing their deficit. I think Europeans are moving in the right direction. I think we're moving in the wrong direction in the U.S. And I think at the end of the day, we're probably going to find that financial markets, generally speaking, will reward those that are moving away from reckless monetary and fiscal policies. I wouldn't give up on us yet, but I certainly don't like the direction of what I've seen in the past week, and obviously neither do the bond vigilantes.
And one quick question before we go. Is it noteworthy or key, perhaps important, that U.S. yields are backing up at a time when the European crisis is only getting worse?
Well, I think there's a widespread perception that And now that the Fed has embraced quantitative easing in a big way, that the ECB may be forced to do the same. I mean, let's face it, there are major sovereign debt issues here and banking issues here that are very difficult to solve because they don't have a unified government to deal with these things. So I think the risk here is that they really can't get their act together. So the widespread perception is the ECB may very well be forced to do quantitative easing. Last week they did buy some bonds, and some characterize that as stealth quantitative easing.
Ed, thank you so much. A great conversation with Ed Yardeni of Yardeni Research about bond vigilantes, the term he coined back in the 80s.